Cheers. What is going on, everybody? Welcome. The last 2024 Fomc meeting. And I know I'm not gonna be the only one watching. I'm not gonna be the only one excited. I'm not gonna be the only one ready. Guys, by the end of this amazing long live stream, you and I are gonna destroy all expectations. Join me. Because, well, I gotta tell you, fam, I couldn't be more ready to see reactions. I couldn't be more ready to see what Jerome Powell is gonna reply to a lot of people. We know the type of temperature that he is gonna be bringing to the table with Donald J. Trump. The level of inflation remains above 2%. I know they're trying to tame it. I know they're trying to lower it down, but is this the best strategy? What's going on with the price of Bitcoin, with the price of XRP, with the price of Ethereum? I posted a video yesterday about XRP addressing, right? And I see a bunch of comments that obviously showing your frustration, right? And I have no problem addressing, that frustration here live or in the comments, right? It's a little bit easier here live, right? Because it's you get to see a kind of like a faster response, but I kind of go back to the same understanding of, if you get to see 104,000 Bitcoin once again, if you get to see if they're at 30 cents again, if you get to see XRP at 2.42 again, and the first thing comes to mind is like a type of bearish flooding sentiment. I think you might be new to crypto, and I get it. Everybody's welcome. But why is it that people just want to buy the green candles? Why is it that people see green and they're happy, and they see red and they're mad? I don't know. I'm not here to be a doctor. I'm not here to be a know-it-all. I understand that the long-term view of crypto is marvelous. I'm not here trying to time the market and be smarter than anybody else. Guys, I am a simple guy who gets it. Guys, we're not in the altcoin season, guys. This is not the altcoin season. The mega bullish, mega incredible altcoin season is about to come. If I see red candles, I get happier because it allows me not to buy the hype, but to buy the FUD. Buy the FUD. Buy the despair. Buy the struggle. Buy the hate. Buy the... You know what I'm talking about? Am I the only one here? So we have this day. We have this news. Amazing stuff. There's obviously going to be some volatility. I love it, man. Don't forget to smash the like button, everybody. Consider subscribing to the channel, guys. Turn on those notification bells. Welcome to Oscar Ramos Live. Inside corners. I get scared and I buy more. My man. Let's go, everybody. Very happy to be here with you once again. I hope you're ready. And immediately, guys, help me out with the poll. We have today, the FOMC, Jerome Powell will hike, pause, cut, and we're gonna go over exactly what that means. We're gonna go over, like, I made a video for you about 3 hours ago explaining. I want to say thank you guys for the support, but based on all the things that I'm seeing online, we're expecting a cut. Hey Oscar, it looks like Trump is gonna make us dump. When? Crypto attracts impatient investors. Andrew, what's up, buddy? Happy to see you. December buy time. Craig, I'm very happy to be live because I get to see also I will say more, do I say it or not? Mature investors, right? Look, I'm nobody special, guys. I started crypto in 2021. After going to different conferences and after talking to so many people, I've talked to people from 2013, from 2017, from 2015, legends, some of them. I don't see him hating. I don't see him at all mad. if we go from 108 to 104, if we go from 2.90 to 2.42, it happens. I mean, fine. Pump it up, right? Chris, don't you know? Pump it up. That's totally fine. So to all my 800 people watching us, guys, we're gonna have a lot more people coming in. The FOMC is gonna start in about an hour plus or so. We're gonna get their decision in less than 1 hour, but I think we got a lot to discuss, and I really love, as you know, guys, we've been live with you since the first FOMC of 2024, and even in 2023, every single FOMC meeting, we've been covering it with you live, no matter if I'm working, no matter if I'm traveling, and much more when I'm here in the office, right, with my mic, with all the setup, with all the charts, with all the things. Right now, it's still not here, but it will be soon, and we'll be listening very, very nicely, guys. And I'm so excited. John 360 in the house. What's up, guys? Welcome. Unfortunately, the crypto market is still a gamble since we don't have regulations. We do have regulations, Paul, not as much as other different regions, but we do have. If we didn't have any regulations, FTX, SBF wouldn't be in jail. The Celsius founder, like we do have some. Gary Gensler is making sure that most of them are being enforced. But the problem with Gary Gensler is that he is also punishing the good guys. I don't mind you punish the bad guys, but why are you punishing the good guys? That's the issue. How's it going, Oscar? I'm doing well, buddy. What's up? What's up? Welcome. Fox 7 in the house. Welcome, buddy. Before the regulations, we were taking risks. When regulations take place, we're going to be reaping the benefits. Look, I am from the Crypto.com army. I am from the XRP Ripple army. I've heard Brian Armstrong from the Coinbase base army, and I've heard other different people too. They all want more regulation. They all want more clarity. In 2022, I talked to Cynthia Lumens, a senator. I saw her live, at a conference. I have a picture with her, actually. But the point is, she was like, 2 years ago, they were working on the Stablecoin Regulation Act, something like that. 2 years later, now things are gaining more steam, more power, right? So I like that, guys. Things are going to be pretty nice, in my opinion. Let's go ahead and open up CoinMarketCap right now, guys. And let's go ahead and get everyone here. You know what to do, guys. If you're enjoying the content, we have a bunch more things for you to do. And Oscar Ramos always likes to, share my opinions. Nothing is financial advice. I've been doing well ever since I started in crypto. I've been losing money when I take some higher risk. I've been making money when I take higher risk. You live and you learn, right? There's a bunch of things that happen when you come in crypto, but overall, we're going to be fine. Papa John's, what's up, buddy? Welcome. We're still early. Cheers to our man, Oscar Crypto Venom in the house. Welcome, buddy. How's it going? Stop asking if XRP is going to 345. If you want to gamble, go to your local casino. Relax. Juan. What up, guys? What up? Today, we're seeing in the last 24 hours, Pengu back up again. Pengu, 2-point-something billion, and it's once again back. Look at this. This is a meme coin, guys. How many of you here watching are like, oh, no, I don't do meme coins, because meme coins are terrible, and meme coins are the worst, and well, this guy, Pengu from Solana, made 652% in the last 7 days. Are we all here for the tech? Right? Or we're here to make some money. Guys, we're here for both. I'm here for both, right? Some of you are like, I don't care what I'm buying. I want to make money. And some of you are like, I want to build in this ecosystem. It's okay. Everybody's welcome, right? But the point is, you can make a lot of money in crypto. Now, if we go here down, these are the biggest losers. Now, Bonk is down. Dogwhip Hat is down a little bit. The typical transition rotation, Litecoin is down a little bit, 10%. Remember, Litecoin was really high up there, which is nice. It's been some rumors when it comes to ETFs and partnerships with the upcoming Trump administration. We broke the story yesterday from Sean, right? In fact, Charles Hoskinson replied to that story. Let me see if I can find it right here. It should be here. It should be here. Here it is. So I made a video for you guys. In my opinion, this is really like wow, aha moment, right? The fact that, I mean, it's not surprising, but for the XRP Hbar, right? Like, man, if this is actually if this is actually true, right, which is pretty nice, it will be awesome to see crypto companies in the US do something with the upcoming administration other than Bitcoin, right? So I'll leave that open there. Why not? Let's go back to coin market cap right here, and I'll take a look at the questions right now and comments. Guys, we're coming in with Bitcoin FOMC in a few more minutes. What up? You're a legend, Oscar. Thanks for all the advice and XRP videos. So understandable. Appreciate it, buddy. This is all just comments. Nothing is financial advice, of course, and I think you get it. And man, I mean, it's beautiful to know that we got XRP at 50, 60 cents, 60 cents, 70 cents. And when we had 70 cents, when I was buying XRP at 70 cents, on the back of my mind, I was like, wait for the retracement, wait for the retracement. But on the other back of my mind, it was like, you have to go in, you have to go in. I mean, it's not easy because right now XRP is 2.40 and many of us want to, we want to buy cheaper XRP. But how about if it starts pumping back once again, right? It's beautiful, and the TA, we've done it. But as you can tell, and you will see in the comments, there's a lot of hype right now because of the new administration, because of Bitcoin, because of many different things. Doge here forever. Curious Economics. What's up, buddy? That's really nice. Like I care if my coin has personality. Just be pretty on pump. Oh, Kirk, I get you, man. No, I mean, that's fine, right? I mean, there's a lot of people that are here for the money, man, and I love it. Definitely, I get it for sure. One of the things that I've heard in crypto is do not marry a project. And it comes and goes, man, because I'm not going to lie to you guys. Like, I love some crypto projects that I'm already married to them, but I have to balance my emotions. I know. Can you watch Hbar? Hbar doing really nice, right? I bought some Hbar and I feel pretty happy on it. There's Hbar guys for my fam right here watching us. With 800 votes right now, welcome to the 1,200 people watching us right now here live for FOMC. People are just voting on cut, most people. And what happens if we get a cut? Well, we're about to see in the markets very soon. Here on my watch list, Bonk is the one that's down. Kronos went to 20 plus cents on the 4th, but it went up once again with the picture with the CEO and Trump, right? Shout out to the Crow fam watching. But right now, Kronos is once again under 20, right? Shiba Inu, guys, to my Shiba Inu holders, underperforming. Shiba Inu's underperforming right now. Once again, losing steam when it comes to price. Back at 25. Look, if I'm willing to speak very highly of Shiba Inu, I also have to be willing to speak the facts on Shiba Inu and on any different token. That's why yesterday I made that video, which I knew in a way it was going to get a little bit of backlash because nobody likes to face the facts, right? But I like to do it because not many people will. And in this case, Shiba Inu is down, but it might also be a decent price opportunity, right? So shout out to the Shiba Army. I know it's not the best feeling, but hey, you never know when big days are to come. That's what I'm holding for sure. Craig, hey, appreciate your kind donation, but the first one on the chat. Let's go. Shiro, nice. Yeah, we made that video too, a partnership, right, which is really nice. Thank you, Craig, for the kind donation, man. I appreciate that a lot. And welcome to the new subscribers right now. We got you right here, turning up the volume too. Let's see, refresh this page. We have it live now. Still not. It's, a little bit early at 12:27 here. It's going to start soon in about an hour or so. And in about 30 minutes, we have the results as far as what they did. And let's go to X, which is going to be pretty decent, man. I mean, there's a lot of beautiful things here on my X account. I've been posting, guys. First, Hbar, all eyes on Hbar. And then, is the XRP army bullish in the red days? Or am I the only one, right? So I remain extremely happy, with how things are moving for crypto. I don't know if you're aware, guys, but Crypto.com just awarded $10 million in crypto. There was an event, right, when it comes to golf. So you're more than welcome to check it out. There's the CMO giving this money to the winners. So a few days ago, well, no, 16 hours ago, why does it feel like in crypto, like 24 hours kind of feels like a few days, right? I'm sure I'm not the only one. But it said, I guess it's time to buy more. And, people commented and just being bullish, man. That's kind of like the part of crypto. You got to be bullish, man. That's the way it is. Selling and rebuying is a gamble. The price fluctuates and then buying is more and then sell is less. You'll need to be careful with that. I mean, yeah, a lot of people do that. The market is big. The market is very, very big when it comes to trading, and I get it. Let's also take a look at the price of Bitcoin and the Bitcoin dominance. I'm going to go to the daily. I always like to analyze the charts and do some TA, especially how things are moving. As of right now, Bitcoin is outperforming the prices. If you kind of like go and expand right here, if I see how we were at 90,000, guys, a month ago, right here, the 18th, 90,000. So we already rose $20,000, basically. Like, are you joking, right? 101 and 110, or so, about 20,000, close to $20,000, guys. That is phenomenal. This is what we want to see, and price of Bitcoin will continue rising even more. 20% close, right? Why? I don't know if you're aware, but here's some other breaking news. Let me go ahead and find it for you guys. There it is. There it is. I was about to find it, and okay, thank you, X. X always knows what's going on here. Well, there you have it on top. Don't you know? Pump it up. Thank you so much, DeAndre. What's up, everybody? Welcome, welcome. Anonymous, will the rate news affect crypto? Yes, they will. Typically, when we have the news, there's not an immediate effect once the result is it's what everybody was thinking about. If the consensus is that it's going to be a rate cut, it oftentimes doesn't have a major effect. After a few more days, you will see how everything changes. I've seen that happen for the last 5 FOMC meetings, where on the day of the FOMC result, not much happens, but the days after, we see how things are moving, right? Now, what I wanted to tell you is what I have up here above me. Michael Saylor, for some loved, for some seen as a legend, right? I think the guy obviously is a master of the game. He says that he's willing to advise U.S. President-elect Trump on crypto. Take a look at what he said on crypto, not on Bitcoin. So, I mean, the guy is a mega Bitcoin bull. He advising him on crypto sounds a little bit of you kind of need to balance that, somebody who is bullish on Bitcoin, but somebody who is bullish on altcoins. And I don't think Michael Saylor might be the best one when it comes to altcoins, right? So it might be digital assets. It might be, okay, let me advise Trump on what the latest blockchains are. Could be. But I think we need Michael Saylor. We need your Charles Hoskinson. We need your Brad Garlinghouse. We need your, if you kind of want to make it all US. But Donald Trump is a person that he just wants the best. Donald Trump is a person that I know, right? I don't know him, but I've been watching him for so many years. He just wants the best, the brightest, the smartest. And that's one of the reasons that he did this. Right here. If you know this picture, drop a like, subscribe to the channel, guys. Very happy to have you. If you don't know who this person is, I got you. That, my friends, is Chris Marsalek, however you want to call it. He's the CEO of Crypto.com. And he, based on sources, they talked about, the digital assets in the US. And I think after this, even Crypto.com withdrew their lawsuit at the SEC, against the SEC. I saw that report happening the last couple of hours. So, guys, there's so much going on, man. Like, so much going on. And if you're in crypto and you can't keep up with this, then this is one of the best channels, in my opinion. I'm biased, of course. You are more than welcome to find other places, but I think that it's also draining, right? That every single day there's something major going on, and wow, it's we love it, man. We love it for sure. If Bitcoin is going down, yeah, XRP I think will go down. Good entry point. Olivia, yep, I agree. XRP 40 cent end of 2024. Guys, breaking news. We have a major bear among us right here. Someone wants to see XRP at 40 cents. What's your message to this bear right here that we have? When is the lawsuit over for XRP? Frank, we need to have the change to the US President Donald Trump for that to fully happen, in my opinion. As we know, Gary is ending his chairmanship at the January the 20th. Real world assets, RWA kind of speaks for itself. Awesome. God bless that person. 40 cents higher tomorrow. Lucas, my man. Heard you on the Crypto Breakfast Club this morning. Great take, my guy. Appreciate it, Jonathan. Yeah, great friend, Zach Humphries. He has been crushing it with the Breakfast Club. Shout out to him. Oscar XRP meme coin thoughts. Ooh, to all my XRP meme coin lovers, I have one banger video coming at you. I'm just waiting for the, I just had a little partnership with a project, so it's coming soon. So get ready for that. XRPL memes. Message to the bears: go to sleep. It's winter. I know, right? Guys, we love our bears. We love our bulls. But I just want to make sure that all my 1,300 people watching, listen to this. I totally get it if you feel that way. And I will agree with you if this was 2022, if this was 2023 even. But it is almost, we're at the eve of 2025, guys. Like, this is the time for me to go all in. I don't mind seeing a 10% sell-off. I don't mind seeing a 5% sell-off if I can't wait to see a 100% pump. That's my mentality. We've been waiting for such a long time. We are going to be fine, guys. We should be fine, and that's why I'm here. Still at 12:36, about 20 plus minutes, guys, to go for the entire Fomc to tell us what in the world they're gonna do. So I'm gonna be bringing you guys those news immediately right now. So I also want to tell you, fam, that in the first link down below and also the first link on top of the chat right there, you will have my BTCC link. You're more than welcome to join us. There's up to 500x positions, leverage futures, right? It's a lot of people who are making tremendous money, longing, shorting, right? And as you can tell, it takes a few seconds to sign up. All good here in the US, in Canada, Europe. Take a look at the info before you sign up, guys. We're having a collaboration, and guys, this is pretty nice. Business in 13 years as well. And I like, that you guys get some discounts, some perks, and up to 10,000 welcome bonus per new user. So I see we have about 80 people already trading. So Very happy to have you guys here joining me on this one. It's time to be bullish because holding XRP as I'm doing right now, it's pretty cool, but trading XRP, it's even better, I will say. Do you think XRP can become our backbone in the financial system? I have 6,000 XRP and strongly believe that on March 10, 2025, when the Feds adopt the ISO 222, it's going to explode. I mean, that's one of the reasons of the RLUSD. And we already see in the Fox business, Bloomberg, and other different chains mentioning RLUSD, because when we're talking about, a decent stable coin, you want to make sure that is well backed up, that is not just sketchy, kind of like funds, reserves. And RLUSD has been approved, certified, verified. And when Trump or any other big institution is asking, okay, which one could be the place for us to go? Well, RLUSD might be the place, right? So I'm bullish on that for sure. I'm bullish on that. Technically, I'm very biased on crypto, guys. I'm just bullish. I love crypto. I tweeted that a few days ago, or I think yesterday. I said this. Where is it? It's somewhere here. Here, I love crypto. I just tweeted. Just felt like it 20 hours ago. I think I love crypto. It's a way for me to express all my emotions, that the good, the bad, the worst, the best, the events, the disaster, the losing funds. It's just a lot of things that crypto involves, right? If you're here in crypto because you always want to make money and never want to suffer or experience loss or go through some pain, then you're going to be extremely disappointed, guys. And it doesn't have to be, or it doesn't have to do with an influencer, YouTuber. You will find that there's some sad, bad people out there who just want to eat your funds for lunch, because those are the scammers, the hackers. You have to be very protected. But after you go through all of those pains, you find you're going to reap the fruits of your investment, and you're going to make some good money if you're putting your cash in good projects, guys. So that's kind of like what I've been doing for the last couple of years, and it's been paying off for sure. Victor in the house, what's up, buddy? Welcome. Michael, what's up, buddy? We have a member here watching us. Let's go. Even with the volatility, it's crystal clear that utility will be big winners of this bull run. Nice. Carlos Marchix, release my funds. Amen. Praise the Lord. Katie Risk, very happy for you. Do not ever use Margix again. They're the worst scum of the earth. No Margix, 100% no Margix. Dominance can reach the 0.61, and if that's the case, Bitcoin should go up for sure. Oscar, what time the Fed decision? Yes, brother, it's going to happen in about less than 1 hour, about 50 minutes. About 50 minutes from here. Don't you know, pump it up? You gotta pump it up. Of course. My only worry is that will XRP blockchain be able to handle 400 trillion liquidity? Curious. I think no blockchain is ready for that, because even Cardano, Solana, the Bitcoin, they're all not perfect blockchains. None of them are. Sui went down once, if I'm not mistaken, right? Or it was paused or something. Solana, well, where do I start? So we just have to see, and the strongest will really come on top. The strongest will come on top for sure. There's Hbar. Somebody's asking me. There you have it. Stellar, guys, are you bullish on Stellar on XLM? I hold some. I kind of wanna. I need to add more Stellar to my portfolio, but I'm kind of like being too focused on Hbar right now and Ondo. But where are my Stellar bulls right here watching? If you are here, guys, make some noise for sure. Oh yeah, this is my sweet baby Ondo. Ondo. If they don't cut, the crypto will go down. When we have a result that that everyone is not expecting, right? When we don't get what everybody's seeing, typically that means huge volatility. I mean, huge volatility, not little, huge. So if we get a cut, not much is going to happen. If we get a pause, probably some sell-offs. If we get a hike, it's over. It's over. I mean, I'm just making fun of it, right? Obviously, it's not over, but it's going to be over for the rest of the day at least. We're not going to get a hike. We just cannot get a hike, right? But if we do get one, oh man, short. I mean, boom. But I don't think so. I don't think so for sure. So there it is. Let's go to XRP. And I'm going to go to the 1 hour right here, guys. Take a look at this one. There you go. Hbar utility is to pay transaction fees, make payments and micropayments, and protect the network through its proof of stake consensus. Thank you, Jeremy. Appreciate that a lot. Got some Stellar, Hbar, Crow, XYO, ADA, PIT, and GLM. Nice. Yeah, I think for sure bullish on Stellar. Like to see the Stellar fam coming in right here. Oscar, what happened to Margex? It rug pulled a bunch of my awesome XRP Ripple holders, and happened a few weeks ago. And yeah, it's the worst event ever. Yeah, just insane. Stupid decision, and they should pay for it. What are your thoughts on Pepe and cheap coins? I like them. I hold the two of them. I think they're going to be fine, completely fine. It's just that because Ethereum hasn't really woken up, I mean, it's hard to see ERC20s do something right now, for sure. It's hard to see it. I'm sure that it should be active now. Let's see. And there it is. It's live now. It's still not live, right? But it's going to be live soon. There you go. Now, let's go ahead and click here and pause it.
The Reserve Banks.
There it is. Guys, it's now live. We're in, and it's going to start in about, what do you call it? Yeah, 40 plus minutes. So we got the video going here for you. In 15 minutes, guys, we are going to see in 15 minutes, we are going to see the result of what they decided. A cut, a pause, a hike. Yeah, it's coming soon. B-Chain was hot tip on Crypto Banter. B-Chain, yeah, I mean, I don't really have much B-Chain, but for sure, guys, for sure, it's one that I'm thinking very, very, strongly to get in some. It's been a long time without B-Chain, honestly. Just sending a message right now. There you go. What do you think about Trezor wallets? I don't have any Trezor. I have a Ledger. And I have, because sometimes they gift me some, or I think I have one right here. I think it's somewhere there, right? But yeah, I don't have any Trezor, but I've heard good reviews on Trezor. Yeah, I've heard good reviews, guys. Has the SEC sued Crow? They, in my opinion, I believe they gave him like a Wells notice, but Crypto.com already, rescinded the lawsuit, right? That's kind of like what we saw in the last couple of hours. I'm still going through it, but it's already being shared on the CrowFam ecosystem. Soon, guys, soon. Cheers, everybody. If you're enjoying the content, we've been live for about 30 plus minutes, and we're going to continue sharing with you guys the latest updates to all my 1,000 people watching us. The best is yet to come right now. And not pun intended, the best is yet to come for our backs. Understand that I am a nobody when it comes to crypto as far as building goes in the blockchain. I'm a voice that I'm an average person who is just trying to make it in crypto. And over the last 4 years, I've been trying to change my life financially speaking, and it's been happening with a lot of work every single day, learning something new. And over the last 4 years, I am still learning something new. If you cannot handle that level of discipline, it's okay. It's not for everybody. If you come to crypto every week expecting to know everything, it's just not going to happen. There's so much going on. So much going on. People watching right now, we are here every single day too, and it's amazing. We enjoy the updates, we enjoy the news, we enjoy the bad news. It's a nice journey, and it's all ending in financial freedom for sure. It's all gonna end in financial freedom for sure. Ryan, what's up, buddy? Welcome. XRP will never be 40 cents again. I do agree with that. I do agree with that for sure. Rodrigo's saying you don't have to worry about cold wallets. Even if the company goes bankrupt, you can still transfer your crypto elsewhere. Be sure to buy a brand new one from a reputable brand. Rodrigo, yes, you're right. Thank you, buddy, for sharing that. It's happening 15 minutes. Jerome Powell, December's FOMC. If Bitcoin has retracement dips past 102 gap, if not, go down to 99. Yes, in about 10 minutes to go, guys, for decision. And right now, we have 1,700 votes, and all it's pointing to a cut. If we get a cut right now, then we should be seeing some pretty good movements. Not much, like I said, if we get something that everybody's expecting, I am not looking for the major pumps and dumps, right? But you just have to wait a little bit longer for the week to take place, and that's it. In this case, today is what? Wednesday, right? So by the end of the week, I'm expecting, some more volatility. And 104,000 BTC is not bad, honestly. If we go under 100 again, that's going to be an $8,000 drop from the biggest yesterday, right? So it's okay. It happens, and I'll take it. I'll for sure take it. Germany Deutsche Bank is currently building its own Ethereum Layer 2 blockchain based on CK technology. Darren, thank you for letting me know that. CK technology, I'm from the Kronos chain, and I know that's big for us too. So I agree. This is my first cycle up and down, but participating is awesome. We're so progressive. Hey, what's up? Yes, indeed. I think people are finally realizing how crypto is gonna get, and we're gonna have a crypto administration. Can you believe it? With a crypto czar, we're gonna have a crypto presidency, man. Bullish, absolutely bullish. All these new people flooding the markets now. As soon as it gets bearish, they gonna run for the hills. I don't think anybody cares about the rate decision. They care about what Powell says. Yep, I do agree somewhat. The rate decision still affects the markets and our day-to-day living here in the US. But what Powell says, it's definitely more important. K18, what's up? Welcome. Shiba Inu is a dead coin. I disagree. I think it still has a long way to go. It's just it has changed from a meme coin to an ecosystem token, guys. For sure. Reedy, what's up, buddy? Welcome to the member. Appreciate to see you. Right now, Hedera Hbar is, in my chart, the only one doing a number on us. Hedera Hbar. If you go to the last 24 hours or the last 1 hour, Pengu winning, not a problem. Pengu is doing a number right now on us, guys. Hedera is right there at 3%. Ava is right there. Ondo is holding pretty nice. And some stable coins right now are here, right? RUSD, oh boy, that one is still not showing here, but it's gaining some ground. I know everybody here holding XRP. RUSD is what you guys are waiting for, and I get it, man. It's exciting. We are gonna see some major moves along the way. I can almost guarantee you that. Jasmine is also doing pretty numbers now. It's been going down, but it reached a nice high level. If you come to Jasmine here, in the last 1 month, we went to 5.6. So at the beginning of December, I'm holding Jasmine. This is another gem, right, that many people might not be aware, but oftentimes I like to tell you guys of, what I'm buying, what I'm selling. So just give it a try, right, if you want. Not financial advice. 7 minutes to go, guys. 7 minutes to go, and we're already seeing some videos right here. This is so fun, right? Good afternoon, and it goes all the way down and it goes all the way up. That's the life of a crypto investor for sure. Man, all I want is Shiba Inu to go to 1 penny and I'm good. Not greedy or Hector. Everybody wants that for sure. Oh, what is this? Excited to announce the collaboration between World Liberty Financial and Etena Labs. There you have it. More big news coming to us from Donald J. Trump's company, World Liberty Financial. Good stuff. Trump-backed World Liberty Financial and Etena collaboration. That's really nice. This is obviously going to be making news, and it comes to show, guys, it comes to show, guys, that there's opportunity for sure. Let's go ahead and start finding the FOMC. And waiting for the FOMC be like, we're just kind of like getting ready, Welcome to the 1,500 people watching us right now, Oscar Ramos Live. Guys, don't forget to smash the like button if you want to, support the content, see more friends here coming in with us. Drop a like, subscribe, we'll have the alerts on. And if you have any comments or questions, please put it here in the chat, and I will be able to address that for you guys. This is something that we mentioned here. A lot of people with 80% are expecting today a rate cut, right? That's the market probability, and could be a neutral impact for the S&P and also for the USD. If we happen to have another rate decision high, medium, it could change, right? I mean, if we have any type of growth in the rate, so just FYI. Here, everybody's like, let's just be extremely bullish, which I get it. So things are gonna get pretty exciting, guys, in just about 5 more minutes. 5 more minutes, and we should be coming in, listening to, or seeing the latest decision by the Fed. Can we see your bag? No. My bag, I show it to my community on Discord. That's one of the perks that they have once you join. But understand, fam, nobody is, how do I put it? Nobody has to share your bag. That's something private, right? But because you are putting yourself at risk, sad but true, right? Something that we have to understand, that there's a lot of great people trying to help, but there's a few people that are trying to steal. So I could definitely tell you, some pointers on that. But yeah, bags should always remain private, not only because you have your own wallets, but you don't want to be the target of anybody, guys. That's for sure. What do you think about Algorand? I love my algo, man. I love my algo for sure. First meme going Bolt. Nice. XDC is a sleeping giant like XRP in 2015. Bullish regards from Germany. Hey, Black Pearl. Happy to see you. Welcome. Love it. Nice. If you're interested in coming to my Discord, Fox Gaming, you will see the link down below to my Patreon Discord. You click on that Patreon link and it will tell you 2 different tiers that you want to select. Once you're on my Discord, I do have some friends watching here from my Discord. There's where I put all my portfolio, my trades. When people are looking for a community behind the scenes, right, and they want to invest a little bit, and you can always stop membership. I mean, it's your decision at the end of the day, right? Oftentimes, it's good maybe for a few days, weeks, months to belong somewhere, right? period. Not to buy a course. I don't sell any courses, guys. I don't sell any courses. I don't want to sell any courses, right? But this is just a community like any other Patreon membership, right? Where you get access to thoughts, videos, behind the scenes. And that's the community that I post what I do and what's going on in my mind, you know, when it's after dark, when I'm not live, when I'm not posting videos, but something big is happening and I'm like, you know what, let me tell this to my private community. That's what I do, guys. And putting up a great team of mods and people, admins to help me out. So, yep. So, guys, 2 more minutes. 2 more minutes. Are you ready? XRP fam, Bitcoin holders, Kronos Army, Shiba Inu, Hbar, welcome to the live. 30 minutes to go for the FOMC. Hbar continues doing really, really well so far. And let's go ahead and pay all our attention to Bitcoin because we're about to see soon that result if it's at 25 or more. I'm excited. I'm excited. Let's go, Shane. Nice. I locked up Crow at 20% for the next 12 months. Andy, if that works for you, go ahead. Go ahead. That's really nice. I know a lot of people do it. Some other people don't do it because then you won't be able to sell if the price actually explodes, right? But you are more than welcome to have your own choice in your portfolio. All right, guys. Latest. This is what is going on right now. And I see someone posting Fed cuts rate by 25. It's about to happen. I mean, it's still not 1 p.m., but that's kind of like what we're seeing. Let me go ahead and refresh right now. FOMC. So cheers. Decision, man. Decision. It's time for the decision to go. So far, let's go to the 5 minutes right here to see really what people are actually trading right now. We're going from a 104, 1 p.m. There it is, guys. It's live now, and we refresh, and the answer is, as expected, the Fed reduced the target rate by 25 basis points to 4.25 to 4.50%. Federal Reserve cut. Let's refresh once again. Breaking FOMC cuts to 4.5, previous 4.75, expected 4.5. Let's refresh once again. I just want to make sure. Big breaking Fed cuts interest rates by 25 basis points. There you have it, everybody. Breaking. Yep. All the breaking is coming right now. Breaking. It is official, everybody. We have received another 25 basis point cut. Let's go to all the breaking stories right now coming in. Breaking Federal Reserve interest rate cuts by 25 basis points. Let's go ahead and repost this. So what does that mean, guys? That it's going to get a little bit easier now to borrow more money, and prime rate, it's going to go down. Mortgage rates could go down too. And that the economy gets activated a little bit more once again. And look at that red candle. Oh, baby. Send it. I mean, this is the 5 minute, okay? This is the 5 minutes. This is the 5 minutes, okay? Oh, man. It's crazy. Bring the blood. Bring the blood. Come on up. Bring the blood. Excited to see the blood. Here it is. Breaking news, guys. The Federal Reserve has cut interest rates by 25 basis points. Let's go ahead and post this in the chat right now, guys. Here you go. There you have it. Let's go ahead and close the poll right now. With 2.1 thousand votes today, the FOMC will and cut has won once again. Let's actually go to the 1 minute because, guys, it's so much trading going on. So let's enjoy the trading for a second. This is going to start live in about 28 more minutes. So strap on, guys, and don't go anywhere. We'll be bringing you the latest. And let me also refresh CoinMarketCap to see if there's anything that it's moving. And let me add another poll right here. How will we see the end of the FOMC press conference, right? Will crypto stay? Press conference, it should be pretty nice. I got it. Press will the FOMC press conference be, we got it here, bullish, neutral, or bearish? There you have it. Oftentimes, if it's bullish, there's going to be some ideas as far as more cuts and more, addressing all the big numbers in the economy. If it's bearish and looking at the levels of the inflation, right now he cut. That means that he doesn't even care much that we're not at 2% core inflation. I'll show you right now. There you go. There you have it, everybody. Smash the like button and start voting right now. Let's see what the people are thinking as far as this conference that is going to start in a few more minutes. To everybody asking, was this good news? Yes, it's good news. It's good news overall. Good, neutral, decent, expected news. One of the reasons is what we had right here. I'm going to bring this right here. So what you see on the screen, guys, is the United States core inflation rate. At the beginning of 2024, it was almost 4%. Okay. In summer 2024, it was 3.2%. Right now, it's 3.3%. The goal that Jerome Powell and the FOMC, they've been trying to do is to bring this to 2%. If I show you, let's see if I can bring it here. Inflation. Okay. Here it is. So inflation as headline inflation, right? Adding everything, it is 2.7%. So if inflation headline is 2.7, then the 2% has been achieved, what they wanted. But I know that core inflation is also something very important for Jerome Powell and the entire FOMC. So right now, inflation is at a level that they feel like they want to start cutting rates. And that's what we're seeing right now. Okay. So once we have, let's go back to core. Once we have core going to under 3, oh man, that's going to be so bullish. And I know Donald J. Trump will want to see 2% core inflation. Okay. So FYI, man. There you go. Welcome to everybody happening, joining us right now. And now, once again, 103,000 Bitcoin. 103,000 Bitcoin. Get ready for those delicious dips, guys. Like I mentioned right now, it takes a while for the prices to go up after an FOMC. Right now, people are deciding to have some fun in the selling department. Let them have fun in the selling department, man. The dumps are coming. That's what it seems right now. So bring it, man. Pumping down. I know, man, right? This is what happens, bro. Ready? What's up, buddy? Welcome, welcome. Is Doge dead because no one talks about it much? No, it's just another meme on that. It will have its prime. Just wait for Ethereum. Wait for other ones in 2025. That's what's happening soon. It takes a while, guys. So, yep, there it is. Let's go ahead and take a look at the committee statement. We have about 20 plus minutes for the FOMC. So, very, very short. Here it is. So let's take a look at this. Recent indicators suggest that the economic activity has continued to expand at a solid pace. Since earlier in the year, labor market conditions have generally eased and the unemployment rate has moved up, but but remains objective, but remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. And that's what I was explaining just a few minutes ago. The committee judges that the risks to achieve its employment and inflation goals are roughly in balance. Good to know. That's bullish. The economic outlook is uncertain, and the committee is attentive to the risk to both sides of its dual mandate. In support of its goals, the committee decided to lower the target range for the federal funds rate by 1.25% to 4.25% to 4.5%, in considering the extent and the timing of the additional adjustments to the range for the federal funds rate. The committee will carefully assess incoming data, the evolving outlook, and the balance of risk. It's exactly what he says. It's like all of this is what he's going to be repeating, basically. The committee will continue reducing its holdings of the Treasury securities and the agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning to inflation to its 2% objective, which, as I mentioned just recently, we are high 2% on the headline, and we're looking at a 3.3% core inflation, right? In assessing the appropriate stance of the monetary policy, the committee will continue to monitor the implications of the incoming information of the economic outlook. The committee will prepare to adjust the stance of the monetary policy as appropriate if risk emerge that could impede the attainment of the committee's goals. Let's go ahead and go a little bit. There you go. The committee's success will take into account a wide range of information, including readings on the labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. There you have it, everybody. That's what they told us. So far from the text, seems neutral, somewhat bullish, that they will continue assessing the market. And something expected, I will say. Nothing it's out of the ordinary when it comes to what we're seeing right now. Nothing is out of the ordinary that I'm seeing so far. Thanks for the live, Ally. What's up, buddy? Ali, welcome. Happy to have you, buddy. Sell everything, Psycho Pearl is telling us right now. Just sell everything. Well, guess what? We're seeing people right now selling some stuff, right? And that's okay. We're looking at the 1 minute. So if we go back to the 5 minute, what I'm now seeing is a decent 10-minute sell-off from 104 to 103. That's what, like 1%? Yep, 1% so far. That's basically nothing. Nothing to really be much scared of if you're in the macro. But if you're trading, guys, just a reminder, join me on BTCC, guys, for your trading abilities and opportunities up to 500x leverage. Even that 1% can be a lot of money when you're trading. And people right now made a lot of money on this news, shorting and closing their positions. It's pretty nice, the trading. Not for everybody, but if you're interested, sign up. There's up to 10,000 welcome bonus, guys, and deposit bonuses and all that good stuff. And it's BTCC. They've been in business for more than a decade. Perfect, guys. So we got about 20 minutes to go for the press conference. We'll be listening. I'll be quiet and muted as always. And after that, we'll give you a summary and see, like, what's up? What's going on? What's the latest? What he said. And that's it. And that, guys, it's going to be the last FOMC of 2024. Can you believe it? We're going to have more in 2025. And but now I know what they're going to ask him. A bunch of Donald Trump questions. They're going to ask him, have you met with Donald Trump? They're going to ask him, are you concerned that he might replace you? They're going to ask him, do you see yourself cutting another 50 basis point? Yeah, I almost guarantee you they're going to ask him that. And he will continue to stay focused. And he's just, he knows how to deal with those questions very nicely. But yeah, Jerome Powell, he's the printing man, printing all bunch of money. Look at this, guys. In the 5 minutes, Hbar, dropped a little bit, but now it's coming back up, in the 5-minute chart. So far, as expected, and as I told you guys, everything is remaining the same. Nothing really is mega changing because it was expected. It was all expected. Let's go to the latest news here. Yep. A lot of news. Elon Musk is on a rampage right now, man. Crazy stuff. So yeah, it's here it is. This is something that you guys have been telling me in the comments right now, so I just want to address it. German financial giant Deutsche Bank is launching its own layer 2 network based on ZK Sync technology. Nice. The ZK Sync technology is one that also collaborated with Kronos Chain, so really nice. Yeah, they are the ones. The institutions are here. Look at that, guys. It's a lot of different blockchains, guys. Do we need that much blockchain? Do we need that many blockchains? Well, guess what? They will use it for all different kinds of purposes. That I can tell you. Hey, Pepe, what's up, buddy? Welcome. Nice. Oof. We've been live now for 1 hour and still to go because in a few more minutes, 15 more minutes, we're going to be listening from Jerome Powell, guys. And that's going to be pretty cool. See what he has to say, the latest updates, the latest information. I'll take it, man. That's exciting, guys. That's exciting. Hbar recovering nice. Yes. I just love that I've been calling that Hbar, man. It's been really amazing to see other different tokens in the ISO 222. Perfect, man. I love it, guys. Boom. There it is. All right. Everybody holding XRP watching right now. I got some news for you. I just made live the Phoenix meme video. So check it out when you can after this or right now. You can always come back, right? We'll be live here. So my first time addressing XRPL meme coins. Oh boy. I'm ready. I'm so excited. So just FYI, guys. The XRP ledger has so much potential, and I addressed that in the video, guys. So give it a look. What's up, buddy? XRP? Yes, XRP should be somewhere there, holding, or is it dumping? I don't think so, right? But yeah, it's doing well. It's doing well. No worries. No spam, brother. No spam. There's Hbar 2, kind of chilling right now, which is really nice. There you go. All right. Perfect. Hbar has also advanced utility indeed. I'm pretty positive. Yes, it does have. Dips are buying opportunities. Yes. We have Red Sea. Let's take advantage now. And let me tell you something, man. This is not a sell-off. This is not a sell-off. Going from 108 to 103 is not a really big sell-off. A big sell-off, you're talking about dropping 20%. It's not happening so far. And with the news that we just had right now with the expected cut, it might end up being bullish because every single FOMC that we have seen, it's been pushing the price of crypto. If you've been paying attention, let me go ahead and go to the weekly right now for Bitcoin. Let me show you this. Where is November 2024? So Here. November. Where is it? Here. Right here. Let's go to the day. Right here, guys. November 5th, election day, right? Election day. But we have November 7th. It was November 6th. November 6th was the FOMC meeting, guys. FOMC meeting. The previous FOMC meeting. It was the day after the election, and the price of Bitcoin rose 56%. 56% from the previous FOMC meeting to today. Okay? So I hope that helps people understand that what we could be seeing in the upcoming months as we wait for the next FOMC meeting is that if we get some retracements, I'll take them, because we could be seeing a $115,000 to $125,000 Bitcoin by the next FOMC meeting. That should be somewhere in January or February. Guys, I see it happening. Why not? Obviously. So prepare for that, guys. It's coming. If we had an excellent time with the charts, with the pumps, with the dumps, like in this majestic rally, look at how many dumps we had. I'll count them for you. We have, one big one, two big ones. Maybe you want to count this one too. And you want to count this one too, right? As one. So in our journey of pumping to the moon, passing levels for Bitcoin, guys, 4 major opportunities for euro to dollar cost average. And right here, you can see, right, that we are following a nice price channel for the price of Bitcoin right there. What a nice ascending pattern that we have for the price of Bitcoin right there. So whatever really comes to BTC, we still have a 100,000 floor. 100,000 floor, not a problem for the price of Bitcoin, right? So just stay put, fam. It's all gonna be fine, and I am ready, guys, for what's ahead, right? I think that's really nice. I mean, when it comes to the opportunities ahead for everything, I'm gonna leave it like that because I like it. That's really good. Welcome, fam. How's it going? Up to 1,600 people watching us right now. There's the votes right in the poll. And there's a lot more people live. There's a lot more people chatting. So really happy that you're choosing us, guys, to stay here. Let's go. It's a bullish day to be alive when it comes to crypto, guys. That I can tell you. It's a bullish day. And let's go to the, probably, why don't we go ahead and go to the 15-minute BTC right now? See some of that blood on the street that we're seeing here. As I mentioned right now, just a couple minutes ago, if you are paying attention, then you're gonna be buying the dip with some of the cash on hand that we have, and that's it. Cause don't you know, pump it up. You gotta pump it up, and don't you know, pump it up. Thank you. Appreciate it. Got more water. That's really nice, fam. 9 more minutes and we go live, listening from Washington. Send it. Fed cuts, 25 basis point signals, 2 more cuts for 2025. Thank you, Breakout Hawaii. Appreciate it, man. To 125,000 is probable. Yeah, I do agree. So hard to buy XRP over $2 after I bought at 50 cents. Just 500 XRP, unfortunately. Dude, I'm on the same bandwagon, bro. It's crazy when we bought so much XRP under $1, right? And now you have to pay an overprice. I mean, like, we have to pay a lot of money. But then what happens if XRP goes much higher in price? Then it becomes harder and harder and harder. But hey, that's the reality of crypto, right? You have to understand that either you're in or you're out, period. You're in or you're out. But we're here, man. We're in. We're trying to make it, and it's gonna be fine, fam. Just have to be patient and understand that it takes its time. And once we're there, you're just gonna be like, oh man, this was actually real. We made it. So yeah. They already cut rates by 25, very bullish. Yes, they did indeed. Like, they cut 25. The first thing that Bitcoin had was to drop, and then it's coming back up a little bit, little by little. Like, guys, this is so bullish. This is so bullish. We got around 1,100 votes. Will the FOMC press conference be bullish? I do agree, man. Do agree. It's gonna be a bullish time, and you better be ready. Because if you're not ready, fam, boom. Oh boy, we just got some. Yeah, we're making some good money here on crypto. We got some funds to spend in crypto, guys. So I oftentimes do this, and why not today? My community watching right now, I have a big question for you. What should I buy? I want everybody in the comment section right now in the live to post the token that you think we should be adding, double down, triple down by the end of today. Let's go. I want to see some tickers right there. I want to see some projects right there. What do you think? It's cooking. Maybe there's some that I know or some others that I don't know. Let's start with Pepe, XRP. I see Hbar, Dog. Deutschland Marks. I see Dog once again. Chip plus Whiff. Very nice. RWA, XRP, Pepe. We're looking at XRP, Hbar. Dog once again. I see. I had some Dog for sure. Yeah, from Bitcoin. What is it called? The Bitcoin ordinals, right? XRP. We got AM token, man. AM token. Oh boy, the Pepe, Flare. I just recently bought Render. So Render, I actually bought Render yesterday. Hbar, Poly. All right. Bread, Lingo, Pepe, ADA, XRP. Okay. Very nice. Say. Got it. BTTC, Shiba, Jasmy. Gotcha, man. Thank you, fam. I mean, I'll tell you something. I've made a video in Ohio that I'm working on my bags for XRP, right? But I'm also working on my bags for Hbar, guys. So right now for me is what I'm trying to do is make sure that my US, bags, US company crypto bags are fully loaded. XRP is one of those. Cardano, Hbar, Algorand, right? Those are the ones that I need. Plus, if they belong in the ISO 222 club, even better. They happen to be in the ISO 222 club. That's kind of where I want to be, because these projects, I don't see them as throwing my money away. I see that as soon as Trump comes in, we should have some really nice fireworks. And I'm willing to hold. Once they 5, 7, 10, 20x, oh yeah, they're gonna go mad crazy, guys. They're gonna go mad crazy, and I'm ready for that. Once they do a big number on us, there you go. We made it. So perfect. Bullish is what's gonna win this. Bullish is XLM. Yeah, Stellar. Stellar. Yeah, it's another one that I still I'm trying to get some, because I'm just in love, sometimes with the ones that I just mentioned. Now, 1.3 votes. Bullish has won. The last big important questions that I want to know from my community. Some nice crypto funds. What should I buy? Perfect. First one. Let's do the classics. Second. XLM. And Ondo per se. Memes. Chip, Pepe, Brett, Solana. Perfect. And last one. Last one. Let's do that one. Last one, I think. What could be last one? Out of everything. Oh, got it. Crypto exchange. Pro, BNB, Leo. All right, guys, big question coming in. Big question coming in. Let's go. 1 minute ready to go ahead and watch the FOMC, guys. Welcome to Oscar Ramos Live, to my 1,600 people watching us right now. In a few more seconds, we're about to witness a nice FOMC. We've always done it this way. I'll mute this mic. All eyes on Jerome Powell. We'll continue looking at the prices. We'll continue looking at the price of Bitcoin, which is right now coming in a little bit down, but all good. All I ask is you drop a like, consider subscribing to the channel. We'll have the alerts on, and the chat will remain active, guys. So welcome, guys. Happy to have you. Starting soon now. Oof. There you go. Ready? Let's have some fun. Last FOMC of 2024. Send it. And here it comes. Perfect.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smialik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this: some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you, there's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then name some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. but it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates. And, we've made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. I mean, a good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
Colby. Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might, if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So, but you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think you pointed out participants in the Fomc really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive? So
what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks of the two are, we think, are broadly, roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, you know, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. You know, it's just an occupational hazard is to look, oh, those high months are wrong. What about the low months? You know, we have a very low month potentially in November. You know, it's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have, our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think it's 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But, you know, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation, well, over the last couple of years, come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. You know, a lot of things move financial conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
So, you know, we're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the, you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand, and it has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and that's part of the reason that explains why we moved ahead today with the action, with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high, wages are at a healthy and ever more sustainable level, wage growth, and so the labor market, this is a good labor market, and we want to keep it that way.
Thanks.
Amira. Thank you, Amara Mokoy from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. Job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way. And that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning, big real wage increases, so that their wages are going up. Their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What % do you see and the committee believes, where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance, and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting but not permanent. And the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in, and also how it's affecting the outlook. And it's not made any easier by the fact that that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think it's appropriate for us now to proceed cautiously, now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation, because policy is still meaningfully restrictive.
Victoria.
Hi, Victoria Guida with Politico. I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering, what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the the goal overall is headline inflation because that's what people experience. People don't experience core inflation, they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected, you're talking about next year. Yeah, so headline it can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
So we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't react to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation, and it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now, and we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high uncertainty. We really, at that point, it's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now. We're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down. Goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and you know, those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. You know, but you're not wrong though that, you know, it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and you know, I think if two years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways. You know, appears to be settling in around, excuse me, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, you know, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and you know, we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
I just bought more XRP. With this dip, what an amazing opportunity. Everybody, welcome to the live. The last FOMC meeting has been accomplished. We received a 25 basis point. Welcome to all the people watching us right now. Very happy to have you guys. What do you guys think? If you've been watching since the very early beginning of this one, it started pretty normal, but it just started dropping and massively selling. And I knew when he said, nope, Bitcoin reserve, nope, that's something for Congress, not for the Federal Reserve. I knew that wasn't going to be well received by the Bitcoin maxis and by the crypto, by us. And what happened? Drop. So yeah, I mean, but one of the things that I was doing is buying the dip. I just finished right now adding some to my bag. One of the previous polls was, what should I buy? XRP, Hbar, Ondo, and ADA. They won, so I did it, guys. Drop a like, guys, if you are liking the content. Consider subscribing. Post a comment right now in the chat right now. We have a lot of people, and people are asking, should I sell? Should I buy? Should I hold? I mean, it's your money. What I'm doing right now is every single dip like this is gonna be because of the emotions and what's going on with the economy, inflation, and so far cutting is bullish. But if you realize that we just dropped from 2.51 right now, right? It's just a 10%. It's a decent one. At 10%, if we go back to the 1 hour right now, let me delete this for you guys. It is finally the drop that I was waiting for. Hey, Bill, XRP's on sale. My man, I do agree. Thank you so much. Guys, this is the drop that I was waiting for. Did you take it? Did you do something about it? I mean, you know what I'm trying to say? Guys, Bitcoin went to 100,000. And now it's 101, right? It is high uncertainty. Anything can happen. Even Stellar coming down right now. Chronos coming down right now. Pepe coming down. Jasmine coming down. Algorand coming down. XRP coming down. And now they're coming back up little by little by little. Wow, man. That was Overall, my expectation for this FOMC as the last one, people were basically telling him, hey, dude, like, you realize that we can have higher inflation and now you're cutting rates? He's like, so far, we're going to do so because things are looking according to our numbers. And I'm like, okay. There was the question about Bitcoin, nothing more than digital assets or any other type of Bitcoin. And they didn't really mention much about Trump too. I mean, they were kind of focused when it comes to inflation and the cut in next year, right? So, man, right now, let's go to the 15 minutes, guys. We are seeing a 2.30 price of XRP. Definitely a punch in the gut for a lot of people who were expecting, okay, our USD is live. We got the breaking news. The entire XRP army is watching and it's exciting. So why are we going down? Well, oftentimes they want to do this because, number one, let's cut all the paper hands. Let's massive liquidate a lot of people. They want to liquidate a lot of people. Understand that right now we had a lot of longs, right? And this is an opportunity for people to say, hey, let's just get all those longs and start from scratch. Let's reset the map. That was pretty crazy, that response. Right now, let's go to X, and we're gonna start seeing some. Here it is, some news. Yes, Fed Jerome Powell says we have avoided a recession and expect another very good year. Here it is. This is what I wanted to mention, guys. This is what I reacted to, and I'm like, no way. And it gave us the drop. Federal Reserve Chair Jerome Powell says Fed is not allowed to own Bitcoin, right? So we don't want Bitcoin in the hands of the Fed. What are the people saying, right? Powell said Fed is not allowed to own Bitcoin. It's up to Congress just to legislate. Correct. So Congress, all those bullish people that we're electing, the crypto czar, they have to do something about it if you want to change that, guys. So just FYI, right now, the price of XRP, we're seeing some green right now. And I'm sure that you guys know for sure that people are taking the opportunity of buying the dip. I mean, that's what's happening right now. Excited for tomorrow. Here it is. Let's go ahead and listen.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
That have been buoyant. Do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change.
So Congress is the one that makes those changes. Of course, the chair is saying at the Federal Reserve, we're not looking for it. That could be the excuse for Trump to say, this guy doesn't want it. We now need to kind of put another person who wants it. Now, that might be too aggressive, even for me, even for you, but I'm just kind of like giving you some thoughts, some ideas right now. If the current chair of the Federal Reserve doesn't want Bitcoin to be added, right, to own it, are we looking for someone who wants to? I'm just asking, do we want the chair of the Federal Reserve to own at the Fed? Question, right? Because they are not allowed by Congress. But what if Congress changes that? Now it's up to the person leading the Fed. He cannot remove him. Yes, I know, Kyle. I know. That's something that was mentioned in the previous FOMC. The thing is that, in politics, anything can happen sometimes. So we'll see. But this is the moment. I knew people were going to talk about it. I knew it. And yes, it's going to go. It's going to go. It's going to go. And this is going to be, I think, the beginning of a change, because Bitcoin maxis are not gonna allow this at some point. Bitcoin maxis wanna have someone who is bullish, in my humble opinion, guys. Right? Right now we have the markets. It was $3.75 trillion. Right now it's $3.53 trillion, guys. So $20 billion, about $22 trillion done, gone. What are we supposed to do about it? Buy the dip. Cheers, everybody. Welcome aboard. Happy to have you all, guys. Drop a like. Appreciate you guys for stopping by and also for the donations and everything. The poll says like this. Crypto is going with about 2,000 votes higher with 48%, 40% lower, and the same with 10%. We've been live for 2+ hours, giving you everything I can, all the info, all the updates, entertainment purposes only. And all I gotta say is we've done it. I've been here telling you guys all the FOMCs in this 2024, and I'm very happy to tell you that this is the biggest live for FOMC that we had before. So if it wasn't for you, it wouldn't be possible, guys. The price of crypto went down, as you can tell, but I have great news. 2025 is going to be the best year for crypto ever. Please do yourself a favor and don't quit. Don't ignore, don't pay attention to me. I'm not important. I'm not relevant. I'm a nobody in crypto, okay? But take a look at the big winners, the heroes, those that I look out to on X. Find them. You know you're going to find them. They're telling us, guys, that 2025 with this new administration, with a bunch of changes, with Ripple, with Bitcoin, with Hedera, with Cardano, with Ethereum, with all the important big conferences happening in 2025, it's like 10 or so big ones. This is gonna be a big year. Believe in crypto. Do your research. Don't give out. Pushing forward. And I think we're all gonna make it, guys. We got a new member, Frank. Very happy to have you, buddy. Welcome, welcome, welcome. So that's it, everybody. My energy has been used. I gotta relax a little bit. I need something. But thank you for coming in. That's the FOMC. We got a nice dip. Like the video or drop a like or whatever you want if you bought the dip. But we'll see how we end by the end of this week. Thank you guys for coming in. It was very, very nice. You know what we're seeing so far in the prices for all the different tokens. But I gotta tell you, man, we have about 12 to 13 more days to go for this year. Get ready for more excitement. That's all I think that we have big when it comes to news or FOMC or so. The CPI already happened for November in this month. So I think right now we're just waiting for 2025. Whatever comes in the rest, in the few days of 2024, I'll take it, buy the dips, and join crypto. I'll see you next time, everybody. Thanks so much for watching. God bless you all. You take care. And peace. Let's go. First link down below, everybody. Join me on BTCC. It's a bunch of awesome things to check out, up to 500x positions. If you want to join my Discord server with my Patreon, so you talk to me behind the scenes, all the nice knowledge, before, after dark, you're more than welcome to join me. There's a link down below there. Join my Patreon. I have different tiers. I also have 2 Telegram groups that are completely free to join, one for Shiba Inu and one for Kronos. Links down below too as well. So check them out, right, if you want to join those communities. And shout out to the XRP Army for joining, for being amazing here with us. It's been a great ride, and I'm just ready to continue this. All right. I'll see you guys. Take it easy. Peace.